The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 2nd, fabulous Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out with the bulls what the bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to give us a call, 877-927-6648. If you can't call in, let your fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tigers Den, well, just any ping will do. So let's go ahead and get this show started on fantastic and fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 395 points. That's 1.5%. To the downside. S&P down just a little over 1%. That's 33 points. NASDAQ 100, 1%. That's 67 points. Russell off 1.25%. That's 19 points. Semis are down 1.5%, 20 points. A sea of red out there. Spot volatility index up 12.98% today. One-day rate of change at the moment above 10%. You know the playbook there. So don't start trying to hop on the short train now, especially if this finishes even worse. Watch that spot volatility index, one-day rate of change. That will not be with you on Monday, maybe on Tuesday, but certainly not on Monday. So if the market finishes like this, right now it's 13%. That spot volatility index is one-day rate of change greater than 10%. If you are interested in shorting the market, then you wait for that nice, healthy counter-trend rally out there. That's the message of that index. You've got gold off $9, trading at $13.38. Silver down 40 cents at $16.75. Light sweet crude off 65 cents. You got bonds down. There's nowhere to hide. Unless you are in the XLY, that's up 39 pennies out there, or Netflix, or Amazon, or Charter Communications, or Athena Health, or Tableau Software. Those would be places to hide. Edwards Life Sciences. So there's plenty of things. Madison Square Gardens. Plenty of things moving to the upside, of course. To the downside, leading the charge dollar-wise, it's Google off 56 bucks. Priceline down 20. Lending Tree down 18. BlackRock off about 11. That's about 2%. So we can take a look at those things out there. There is a question that came in from one of the Tigresses out here, Kay. And Kay had written in, and she just asked me if I would take a look at what she has asked. Is there any kind of correlation on down days between Deutsche Bank? DB is the ticker symbol. Here, let's go ahead and put up the Deutsche Bank. Let's do it. Where are we going to do it at? Where are we going to do it at? Here, a 3-time frame out here. Let's just simply take a look at it. The problem with taking a look at this equity, and you see big down day, big gaps out here, but all of that is, or most of that is going to be currency. But you can see, today's a big down day, and so here's what I've done. And I just did it in a few moments time out here for you, Kay, is to, let's see, where did I put it? And I know you were saying, you're not really taking a look at the entire correlation between the two, which is the bottom panel. So the top panel of our screen, S&P 500. Bottom panel is showing you the correlation of Deutsche Bank to the S&P 500. If the lines, the bars are above zero, it says it's a positive correlation. It means they both move in the same direction. If bars are down below, says no, they move in an opposite direction here. So do they move somewhat similar? over a period of, I think that's a 5-day average out there. Yeah, sure. But, you know, I see a down day today out here, but I see a big down day inside of Deutsche Bank on January 5th, and I don't see where our markets went to the downside out here. I guess as my view, if I take a look at this trading session out here on July 27th, you know, fairly big down day, pretty small down day for us out here. I can look at a big, I don't know. I haven't done enough research. If you think that there is a pattern here that's going to assist you with regard to what the S&P 500 is doing, I say go for it. You know, absolutely. I'll be the last one to suggest otherwise out here. But it doesn't visually strike me as I take a look at it. But maybe some others out there in the listening audience are going to say, hey, you know, Kay might be onto something. So thanks for noticing that and bringing that up. I see some questions in the Tiger's Den, and then those always have priority because these markets, we'll come back to these markets, what to expect and anticipate and so forth. So let's go to Harley, and Harley wants to take a look at ORBK. So let's go take a look. You know, if you take the time to write in, I am going to take the time to go do my best to provide you with the best information that I can. ORBK, that is Orbotech out there. Harley, you bought some a couple days ago, looking for 56 or 57 short-term out here. So 56, I can see that. When you take a look at a daily price chart out here, what you're going to notice, on our 3 time frames, you're going to see these blue horizontal lines. Those are your TAS market profiles. And when price is trading with inside the box, as this is, inside the box means between a price level of 56.31 and 51.66 out there, that is your range. That is your price range. Now, the beauty about this, Harley, from a daily standpoint, and you said looking at this from the short term, so I'm going to say to myself, well, for me, the short term would be, let's go ahead and take a look at the influencing factor of the daily chart, right? That would become our core thing to look at. So we know that support held 51.66, but we also know inside of this equity on a daily basis that sellers are lined up between 54.76 and 56.31. And we also know that this structure of this box is a bearish structure. Does not mean that price cannot get to 56.31. What it does say is getting above 56.31 could be really difficult to do. At least the snipers are hanging out up there. So, you know, is this going to make it? The stock chart does not look bad. It's been consolidating, right? Been consolidating ever since this huge move inside this equity on November the 6th out here. So you've got a clear consolidating pattern out here, both at the highs and in essence really at the lows out here. So, yeah, I can see where you can get it. Will you get it? I don't know. Because if you take a look at the weekly box, it too has a bearish structure out here. And price this week ran right into that point of control. Oftentimes on a bearish structured box, that can certainly be a level of resistance. So best of luck with that trade in Orbotech Limited. Otherwise, I don't see any problems with it. It's just you're looking at the short term, and I wanted to give you the short term answer. Steve Rhodes with TFNN. Dow's off 380. Let's go take a look at it when we get back from this break. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So I mentioned we'll go take a look at the Dow, but first we're going to just check in on the New York Stock Exchange. So let's just summarize what it is that we do know. We do know that right now that the spot volatility index has a one-day rate of change greater than 10%. Does that mean anything? Well, let me go all the way back to this chart out here. For those of you that are longtime listeners, followers, newsletter subscribers, the whole 9 yards there, you already know the answer to that. And you know, as a betting man or woman out there, you're not going to go against those odds that there could be a bounce or bottom out there. That's why if you are short the market, then God bless you. Not because you sneezed, but because you're on the right side of the trade. Because there is a crossover that suggests, from a market breadth standpoint, that you are in fact on the right side of the trade right now. So you don't want to start chasing this thing now when it's down 400 points. No, 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 no. The green arrows on my charts out here are days when you've got that spot volatility index, one-day rate of change greater than 10%. And it either creates a bounce or bottom. It does what it does not typically do. It can't. There's no indicator. I do not have a single indicator that works 100% of the time. But these are not coin flip indicators either out here. So you don't want – I'm suggesting you don't ignore it out there. Go back and do the homework yourself. And then you'll kind of see what it is that I mean out here. And the last time we had that one-day rate of change was a few trading sessions ago. That certainly stalled price for 3 days. That was on January the 29th out there. So it stalled there. It did what it was supposed to do. Don't know how it's going to end today. You're at 13.8. So that's one element. Another element of a sold condition inside of a marketplace comes from the New York Stock Exchange. Advanced decline oscillator reading, that's the difference between two exponential moving averages, right now has a reading on the railroads of minus 265, 264.79 if you're looking at the exact numbers. Folks, you go back here and you take a look at other instances when you start getting down to this level here, guess what you get? It doesn't happen immediately. Most times it does. You get a bounce or a bottom, at least for several days out here, inside of the New York Stock Exchange. So you kind of couple that move with that spot volatility index, and I'm just saying you might want to go do the homework over the weekend. Go put those things on your tools and your charts and just say, okay, I kind of get Steve's point about not trying to jump on the short end of the stick, because you could end up on the short end of the stick if you were to do that right this moment. Now, when we take a look at the New York Stock Exchange out here, it's trading right around a level of support, that little red dashed line out here. We're at 13,194. That would be if you were looking for that seventh wave move, which we did have 2, 4, 5, 6 trading sessions ago, and you were to target, hey, where would price head to on a move lower? You would pick, in essence, this area where we're at right now. We don't use this as an exact number. The exact number, by the way, I can give that to you. It's 13,215, and we're at 13,193. If you close below it by a slight bit, is it a big deal? No. So you have a number of different factors out here. Where would the New York Stock Exchange bounce to if this is really just trying to set up an A to B equals CD to the downside, a Gartley buy pattern out there? And wouldn't that be a beautiful thing? Well, your first target would be Stevie's red line at the 13,507 level. Now, a number of other things are going to have to happen in order for that to occur out there, but that would be one of the things that you would look for. Now, the one thing that is going on inside the market right now, and I haven't even gotten to the Dow, have I? But I will. I'm just trying to take both of us through this one step at a time out here. And that next step says, hey, Steve-O, what's the market breadth doing? Well, we talked about market breadth. And we take a look, it's got bad breath right now. It's stinky breath, okay? It needs to brush its teeth out here. What you can see, and this is the first time inside the S&P 500 where we have had a crossover, bearish crossover, meaning there are more issues trading now below the bottom of their boxes versus the top of their boxes since August 29th. This says to us now, slightly lagging tool, but not a bad lagging tool. In fact, a muy bueno lagging tool, that you now have bears that are firmly in control. So what is it that we're saying? We're saying there is definitely, at this stage of the game, still more downside potential out here. And that what we would be looking for are some counter trend rallies. Because until price gets above Stevie's red line, or we see some other important bottoming pattern out there, that's the only call that I can go ahead and make. So as we speak right now at 123, the S&P 500 is giving you a confirmed sell signal. Now, that's on an intermediate term basis. That is not on a long-term basis out here. And the only way I can say long-term is this is the daily we're looking at. Here is the weekly chart. We are a ways away from any kind of long-term signal out here. So your long-term money, just stay put. Not kaput, just stay put. And we have that same kind of signal here from the NASDAQ 100. These are not the only two indices, because we can actually go look under the covers inside the S&P 500. But here you can see that bearish crossover in play on a daily basis. We haven't seen that for quite some time. And when I say quite some time, I mean yesterday was a close. We had the crossover. Today is follow through. That's what you're looking for to confirm signals out here. On a longer term basis, if you take a look at the weekly, you can see nowhere near any. In fact, it's very healthy. NASDAQ 100, as an example, on a longer-term standpoint, 70 issues where price is trading above the box, 11 issues where price is trading below. So very healthy. We take a look at the NASDAQ 100. As long as we take a look at the NDX 100, what is it that we want to be watching for? Well, trying to identify a pattern. What patterns have been broken through at this stage, and what become price targets out here? I'm glad you asked me that question. If we take a look at it, right now, when we look at the daily equity futures contract for the NQ, what we can see is it broke right through support. Now, we don't typically call it support. Normally, you and I are referring to this level as resistance, which is the top of the box. And it is resistance, except in this case here at 68.83, when this box formed, price was already above that level. So you would have anticipated, I would have anticipated, I did anticipate, and rightfully so, because for basically 2 out of the last 4 trading sessions, it held as support. Well, guess what? It's now down below that level, 68.83. It's an orange bar. I won't be with you on Monday. It means to me Sunday night we're going to see some other new profile form, or should form. But in lieu of that, this would suggest to me that where the NQ is headed to is 67.33. Now, this is a bullish structured daily box. I do not know what the structure of the next box will be, and it doesn't have to form. It just typically occurs when you see that orange bar. Just a signal it's trying to create new profiles. So new profiles mean new data come Sunday, come Monday out here. But right now, it's traded right into certainly one level of support at 67.93. And at 67.93, are there any patterns to pay attention to suggest maybe, just maybe, that's it for the day? I don't see it just yet. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 396. Now, I need to really qualify that last statement out there, because what we were looking at was inside the NQ to say, hey, are there any patterns here to suggest that there's any kind of, at least a short-term bottom for some type of counter-trend rally to form this afternoon? And I said, no, there's not as of right now. I think I said that, and if I didn't, I just did, and that's as of 1:30 in the afternoon. Now, there are some patterns that are present. but there's not a pattern that has formed. And what I mean by that, I'm just going to look here with you at a 2-hour chart. And on a 2-hour chart, I almost was going to do like the Gilligan's Island song out there, a 2-hour chart. And so we take a look at that 2-hour chart. No Pavarotti. I got it out here. We could take a look at the, there's 2 patterns that are forming at the moment. At least 2. Let me see what the wave count looks like on the 120-minute chart. I doubt that that's in play. No, that's not in play. So if I were to look at wave counts, where would this thing even be at here? Just the 4th wave. So, okay, when I say, I don't mean like just the 4th wave. But if we take a look at what the 2-hour chart is doing, we can see that it's completed now a 1 to 1.272 A to B equals CD pattern out here. We can see that price is also pushing on a string. It's pushing lower with less relative energy. Does it mean anything? Doesn't mean anything till you get a bullish reversal signal. That's the first thing. And then it doesn't mean anything until you get a move above Stevie's red line. So that's what it would require in order for us to say, now that'd be quite a move. At red line, by the way, 68.79, that's 50 points higher from here. That would feel like, woo, out of the woods. Can't get out of the woods until you get above Stevie's red line. There's no bullish signal here as we speak right now. No bullish signal. So, and price, if price doesn't form, if the bulls don't come out, you should anticipate that the NQ, we're using this 2-hour chart, would head to about the 67.57 level. That's the perfect use of the A to B equals CD tool. We use it as a price projection. And we use it to say, okay, here's the different floors and the levels where price could go to. How do we know where price is going to head? We know that because we will see the bulls, when price is moving lower, step in. And when they step in, we'll see that. They will have they cannot hide. They have to produce some kind of bullish reversal signal. It's not there yet. This 2-hour time frame that we're in, I believe, ends at 2 p.m. Now, depending on how this candle session ends here in 28 minutes, it's a small-bodied candle. Right now, it's a doji candle. If it's a doji, or maybe it closes down just a bit, it would become very easy to create a bullish reversal signal, but it's a 2-hour chart going into 4 o'clock out there. Is there anything else on a shorter-term time frame that we can see inside of the NQ? The answer is no, I don't see that either out there. So not necessarily looking good. Can I see some areas where, or can you see areas where the buyers have stepped in? Sure, they form that nice little, and that's not a little. I should take that back. That huge hammer candle that took place at 10:30. So that low out here inside the NQ, and that low is, drum roll Johnny, right around 6,800. It's not exactly 6,800. It's 6,803. That's an area where buyers believe that there was, and in a big way, believe that there was that was a worthwhile spot to take some action out here. So that's kind of a really, I think that's kind of an in-depth analysis of the markets. Now, we didn't take a look at the Dow. Let's at least touch on that. Otherwise, Steve-O, what's the deal here? And inside of the Dow, the number to be watching is 25,956. You're well below that at 25,761. 25,956 was the bottom of a bullish profiled box. Not good to break through a bullish profiled box out here. It says you want lower price. Well, where's lower price then? For this, we have to switch over to the weekly time frame if we're going to just simply stick with profiles out here. That says 23,575. But Lee Corso, he would say, not so fast, Steve Areno. And the reason is because you can see on a weekly basis that it now has a orange or gold colored bar. We'll call it gold. That way we can go, that's a segue into going and taking a look at gold, a gold colored bar out there. It says on a weekly basis we're about to get some new profiles. So I can't really provide you with a number. It's going to arrive, or should arrive, come Sunday, Monday. I just won't be here with you. I'll be on a plane. And don't think I'll be able to do the show from the plane. In fact, I'm sure of it. And in any event, so, you kind of want to, I wish I could give you the figure to be looking for. We can also see in the Russell 2000, it too is going to go ahead and form a new profile out there. Not the case inside the ES, not the case inside the NQ, at least not as of 1:35 in the afternoon out there. So that's a take and an analysis in the markets. In summary, what we know is that with regard to market breadth, we have a bearish crossover. With regard to profiles, it's broken through some significant levels of profiles. Some new ones are going to form, which will give you some type of gauge as to where price might find support, if it will find support. So you've got the sellers that are absolutely in control. What else should you expect? You should expect some pretty mean green counter trend rallies if the market were to close like this right now, based on the overbought conditions inside the New York Stock Exchange, based upon the one-day rate of change inside the spot volatility index. So if you see that Sunday, Monday out there, you won't be surprised. What does all that mean? That means even if you believe this is a big, massive change in trend, don't jump on the short train now. Sell the next counter trend rally. That's the way that I think you should go ahead and handle that. Now, we talked about those gold lines out there and the importance of those TAS market profiles, and there was a little shellacking that was going on inside the metals market. Still is going on, so to speak. However, the key number inside of Goldilocks, you and I have talked about this ad nauseum for days, and that's 1333.30. Now, price got down below that today. It got down to 1330.10. $3 below that. Big whoop. Well, it would be a big whoop if it closes below, not 1333.30. Remember, we had as a backup plan out there, 1326.90. Here's what we know about gold right now. It has tested and rejected the bottom of its bullish structured box. This could be the buying opportunity inside of gold, and therefore inside of the mining sector out there. Dip your toe cautiously, but what we can say about gold is thus far it has held support. You say, Steve-O, what happens if it closes below 1333? Expect 1326.90, the top of its daily box, to get tested. No new profiles that we can see out here, and if it holds 1333, what you should expect? A bounce back up to the top of the profile box at 1354. Just kind of been moving sideways out here. That's what's going on with gold. But what's an influencing factor inside of gold? And what, in fact, made it move lower today? You had the U.S. dollar index headed higher. Of course, you and I know it was the traders in Europe that were able to put the kibosh, right, on gold. And if we take a look at the U.S. dollar index, looked pretty strong a while ago. And what is it doing right now? It is trading right on Stevie's red line. 88.84 is both where it's trading and Stevie's red line. If it's unable to close above it, I'm not talking like by a pip or two, resistance is held once more. That would also be somewhat short-term bullish for gold as we take a look at that range. It's just been range-bound. That's the way I see it. What do you see? See Rhodes with TFNN. Be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Overstock.com, Mike P. wants to take a look at this. He's got some puts on it and wants to see what our thoughts are and where this thing might be headed to so we can decide just exactly what he wants to do. So trading right now at 59.40. Here's what we know about Overstock. Well, here, when I say that, first I thought I was looking at a cryptocurrency. If we take a look at the monthly chart out here, what a roll this thing has had since August of 2017. You want to talk about just skyrocketing. Maybe, did Overstock.com say they were doing something in cryptocurrency or something? What had this thing moving the way that it did? When I say moving the way that it did, we're talking about $14.30 to $90, $89.80 to be specific, in 1, 2, 3, 4, 5 months out there. You talk about a vertical move out there. So that's it. So when you do those vertical moves, you're always subject to coming all the way back down to where it broke out. And yes, indeed, you do. That's like in the 11 to 18 or 14 to $22 range out there. Is that what I'm forecasting for Mike as to where things are going? No. First things first. Here's what we know on a weekly time frame out here. This is now pulling back. It's not there. You're inside a weekly bullish profiled structure. And this said to you, Mike, that you would have anticipated that price would get down around the 56.20 level. We haven't done that. The low so far this week has been 57.65, pretty close. But I don't know. I wish there was a tool to tell me whether or not it would be able to break through that bullish structured box out here. If it did, that's what you would be looking for if you're going to stay inside this trade. So I'm not saying exit. Just trying to give you the information for you to consider out here, but it is moving into support. If we take a look on a weekly basis, you've got 17 million shares to the downside. It made a high with 29 million. It's not exactly like this thing has got sellers galore in there. And in fact, the bar that it's moving into has got 31 million shares. So on a weekly perspective for Overstock.com, it's not like everybody is jumping ship out here. Profit taking? Absolutely. Jumping ship? Not necessarily. Lower prices to go? Probably, potentially. But 56.20 is going to be an area for you to look at. You've got an A to B equals CD to the downside. You're past the 1-to-1. This says 54.22 would be game out here. It could even get down to 46.22. I don't have anything in sight as we speak right now to tell you to, exit the trade. But this would be the information that you would use out here. So in summary, with regard to Overstock.com, Eiffel Tower formation, price pulling back into an area of support, 56.20, and it's doing so with lighter type volume. Today, on its move, when it passed the B point, which had 5.3 million shares, it's only done 3.6. Now, when I say only done 3.6, there's still a couple hours left in the trading session. But it's not as if, as I said before, sellers are just, rushing to the doors out here. And I use the word Russian in the Russing kind of word. I guess you have to worry about using that word these days, After all, every single thing is being recorded and taped and listened to. You already know that. We didn't need a memo to tell me that. You didn't need that, did you? All you have to do is just watch the Snowden movie to figure that one out. Okay, that's all my comments that I will say out there. So there was another question out. So, Mike, I hope that helps you out. There was a question out here. If we could go take a look at, what was it? LBTY. So let's go see what the heck that even is. LBTYA. What is this? This is a $38 stock right now, Liberty Global. And as we take a look at it, it's always a beautiful thing. Looks pretty good to me. Looks pretty good on the daily. Looks pretty good on the weekly, looks pretty good on the monthly. Now, when I say it looks pretty good on the monthly, you're in a monthly bearish structured box that says this thing ought to get up to 41.25. Don't own it, is what Tarley says. Been watching it for a few weeks. The charts look good to you. Well, the charts look good to me. And he thinks they'll retest the 54 is the area. And that's a possibility. Let's take a look at a weekly chart and try to get a gauge whether or not that is game on. And what this thing needs to do is it needs to get above this area. When I say this area, we're referring to the price point of 37.69. You're at 38.39. Okay, mission accomplished there. That had volume of 11.5 million shares. You got over it with 8.7, and this week 14. You now have a confirmed A to B equals CD to the upside. If we take a look at that pattern, and probably Harley's already done this type of work out here, but as we go take a look at it from your perspective and mine, it's already done the 1-to-1 A to B equals CD to the upside because it had about an 82% retracement out there. So where does price head next out here? 39.70. 39.70 is the exact 1-to-1. Actually at 39.73. I don't know that that means anything. I just kind of do that for blanks and giggles. You can fill in the blanks out there. So 42.84 would be its next move. That's on a weekly basis. No bearish candles or anything. No reason to believe that it wouldn't do that. The daily pay looks pretty good to me. This has got some big volume in it today, right? And this is taking out a recent swing point with some volume. So look, on the daily basis, you had a swing point from August 14th, 1.7 million shares. It was passed with 3 million shares. So it does look like this wants to go up to that next level. That next level being the 42.84. I'll go with 42.84 before I'll say it's going to make it all the way back up to the highs and then some. So that is for Harley, Liberty Global. And yeah, folks, in the den, it's slow. I don't see much in the way of people letting their fingers do the walking. So you could just simply fire up the request out there. And this show is for you. It's totally for you. So you fire up the request. I am more than happy to go ahead and take a look at them, put an additional set of eyes. And Michael, you're welcome. Said they would accept Bitcoin. Oh, so Michael says, yeah, there was something Bitcoin related inside of Overstock.com. So no wonder the chart. But hey, the chart is as what it is. And you know that it's coming back into a level of support. And, I can't really see the future. We can just see the present and remain present and just simply know where the roadblocks are out there and, in essence, what it is that you look for. So I don't see anything else that has come in. The Russell doesn't want to die. So let's go take a look at Russell Crowe out here and see whether, the Gladiator, see what the Gladiator wants to do. And the easiest way for us to go take a look at the Gladiator probably is take a look at the 4-time frame chart out here for the Russell 2000 equity futures contract and see what it is doing out here. Man, it's not looking good necessarily. Below support on a daily chart, below support on a 240, below support on a 60, trying to get its legs here. trying to get its legs to maybe have a bounce up to 1567. That's just inside a 30-minute set of profiles out there. Bullish structure. That's why the 1567 is a possibility out here. And I think maybe we covered this earlier. It looks like there's going to be a weekly profile that forms on Sunday night. Maybe it's Monday morning. So subscribers will get that because I'll be sending out the newsletter Sunday night about as late as I can, which won't be too late because I got to get to bed early to board a plane to Maui. Maui, Wowie. Steve Rhodes with TFNN. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. As I mentioned, I'll be gone next week on Monday. I'll be gone for a couple of weeks, but I am because I'll be in the Hawaiian Islands, and with the 5-hour time zone difference, doing the show at 8 o'clock in the morning. You know, after I get up after a long evening, should be relatively easy to do. So, except for flight days, excursions, things like that, you know, I'll do my best to do the show. Right now, won't be able to do it Monday. I'm trying to be able to do it Tuesday. I think it's a 50-50 shot. Maybe it's 55-45 shot. So planning on being able to do that. We'll definitely be doing the show on Wednesday at this stage. Won't be able to on Thursday and Friday. Most of the following week, right now, all of the following week, Monday through Friday, I should be able to do it. But I know there'll be a few things that'll be thrown in there. So, you know, if you're sending me emails and I'm not getting back to you and all that, and it's going to be more complicated because I'll just be doing the show from one screen, a laptop screen, versus this setup that I've got here that makes it so easy for me to just take a look at different charts and time frames to see when things might be popping up that are worthwhile for both you and I to take a look at. So, you know, to summarize, we know that we've got nice market breadth, bearish market breadth crossovers. They suggest lower prices to come. They suggest lower prices to come because we don't really see, or I don't really see, any other patterns on the daily time frame charts or a 5-hour chart out there that really suggests that there's some type of bottom. Now, what I do want you to know is, and what I want you to prepare for, and I think is really the better trade than trying to go short, is in fact looking for that next bottom, because it is coming. Because the Dow still is going to 30,740. That's my initial target out here? Absolutely. So you know, you can prepare either. If you want to prepare for the short, I'm suggesting you wait for a counter trend rally and then go ahead and fire away. Don't try to jump on it and say I missed this train out here. And more important than anything else, just stay tuned. Because your favorite polar bear, my favorite polar bear, and the polar bear that's going to be on Sunday at the Olympics, I'm sure there's going to be a Coca-Cola commercial. And the star of that's going to be David White. He's up next, folks. Stay tuned for David. After that, Tom O'Brien, 3 to 5. I'll see you best as I can on Tuesday, definitely Wednesday. Be safe.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.